Welcome to the deep dive. If you're anything like us, you've been watching gold prices just shoot up lately. Hitting new records constantly. So, our mission today is, well, pretty straightforward but important. Cut through all the noise around this massive gold surge. We want to figure out which top miners might still be, a potentially undervalued play for you, the curious learner. Just to set the scene here, our sources are showing gold's up over 45% just in 2024. That's huge. It's heading for maybe its best year in what, 45 years? This isn't just a rally. It feels pretty historic.
Yeah, that 45% number is kind of staggering. And, historically, the miners themselves often lag behind the metal price. But that gap, it feels like it's closing fast now. So the real question for you listening is, have the big players we're looking at, Newmont, Agnico Eagle, Barrick, Gold Fields, have their valuations finally caught up? Or is there maybe still one out there trading at a genuine discount compared to the others?
Okay, but before we get into any data, we absolutely have to be crystal clear on this. This deep dive is purely for informational and educational purposes. We're just reporting on the data and the analyst views we were given. It is not financial advice. You really have to do your own homework, your own research before making any decisions.
Got it. Absolutely essential. Okay, let's unpack this, starting with just sheer size. These are global giants we're talking about. And in mining, size really counts, doesn't it? Affects efficiency, market clout, everything.
Oh, definitely.
So Newmont Corporation, ticker NEM, they're the clear leader, right? Market cap around $93.6 billion, just massive. The biggest gold miner globally. Yeah, undisputed. And that size gives them this huge advantage. One source calls it a wide economic moat. Basically, their amazing portfolio of mines means they usually have lower costs, what they call all-in sustaining costs, or AISC. It helps them handle, the ups and downs better than most.
Which makes sense. Okay, next tier down, Agnico Eagle Mines, AEM. They're second, sitting around $85.11 billion. Still huge, but a step below Newmont. Then the gap gets a bit wider. Barrick Mining, that's B, is at $56.28 billion. And Goldfields GFI rounds out our group of four here at about $38.01 billion. So yeah, Newmont's almost double the size of Barrick. Quite the range.
It is. And, it's worth looking at the recent stock movement, too. The momentum tells you what the market's thinking or maybe anticipating. Agnico Eagle, AEM, has just been, flying. Hit a 52-week high recently. Last close price we saw was near $169.
Wow.
Yeah, that shows some serious market enthusiasm, right? Investors are clearly willing to pay up for AEM right now.
And Barrick. They also had a big jump, didn't they? Up almost 28% in the month before early September. Seemed like it confirmed that idea that Barrick was maybe due for a rebound.
It did validate that thesis. But the analysts and our sources seem a bit cautious now. They're worried that momentum might get weighed down by maybe higher costs or lower gold production expected later in 2025.
Okay, so that brings us right to the core question of this deep dive. The hunt for value. We need to look past the excitement of 45% gold gains and see if these stock prices actually make sense based on, the underlying company value.
Exactly. This is where we shift from just size to price, specifically comparing the current stock price to these fair value estimates that the analysts calculated. This fair value is basically their best guess at what the company is intrinsically worth based on their models.
Right. So how do they stack up?
Well, run the numbers. Honestly, most of these big guys look a bit stretched right now based on these specific estimates. Take Agnico Eagle, AEM, trading at $169.42, right? But its fair value estimate in our source is just $115.97.
Whoa, that's a big gap. A huge premium the market's putting on it.
Massive premium. Newmont, NEM, is a bit closer. Last close, $85.14. Fair value estimate, $79.04. So still trading over, but not quite as dramatically.
Okay.
But then look at Goldfields, GFI. It closed recently at $42.47. It's a fair value estimate. A startlingly low $22.89.
That's almost double. The market price is nearly twice the fair value estimate.
Exactly. It really reflects that strong momentum GFI has had. The market's clearly betting big on future growth there, telling a very different story than just the current financials might suggest, according to this analysis.
Okay, so AEM, NEM, GFI, all trading above their fair value estimates, some by a lot. What about Barrick?
Barrick. B. This is where it gets interesting, comparatively speaking. Barrick's last close was $32.99, but its fair value estimate, it's actually higher at $35.64.
Wait, so Barrick is the only one in this group trading below its fair value estimate based on the specific data?
Based purely on this price versus fair value metric we have.
Yeah.
Yes, it stands out as the comparative outlier here.
Huh. So, if it's the only one at a discount, why isn't everyone just jumping on Barrick, especially with gold prices so high? Is the market just worried about that lower 2025 output we mentioned?
That's the million-dollar question, isn't it? That's the tension. The data point suggests the discount, and it lines up with some commentary we saw saying Barrick is still trading at a discount.
Mm
But maybe the market is pricing in that risk.
hmm.
When you look at other metrics like forward-looking ratios, it gets a bit more complicated.
Like forward PE, price to earnings.
Exactly. If you look at the forward PE, Gold Fields actually has the lowest at 14.27. That suggests the market expects its earnings to grow really fast, maybe justifying that high valuation eventually. Newmont's next at 14.85, then Barrick at 16.13.
And Agnico Eagle, with that premium price.
Highest forward PE of the bunch, ton 2.94, reflects that premium price and stability factor people are paying for.
Okay, so valuation is one piece. What about just raw financial strength? Resilience. You need that even when gold is booming, right? To handle issues or project delays.
Absolutely critical. And if we look at profit margin specifically, trailing 12 months net profit margin, Agnico Eagle and Newmont are basically neck and neck at the top. Both are sitting right around 30.6%. That's really strong performance.
Wow, yeah, identical almost. How does Barrick compare there?
Barrick lags quite a bit on that specific metric, coming in at 19.99%. GFI is closer to the leaders at 28.72%.
And debt. That's always a big factor in mining.
Huge factor. And this is where Agnico Eagle, AEM, just blows everyone away. Their debt-to-equity ratio, which measures debt relative to shareholder equity, it's incredibly low.
Chart 0.03. Seriously. That's practically debt-free.
Pretty much. You're paying that high stock price premium, yes, but you're buying rock-solid stability. They're almost immune to things like rising interest rates that could hurt more leveraged companies. It's like a financial fortress.
That's impressive stability. But stability isn't everything. You need efficiency, too. What about free cash flow? You know, the actual cash the company generates and can use.
Good point. FCF is key. And if we look at free cash flow yield, that's FCF, relative to the market cap, Newmont actually leads here. NEM's FCF yield is 5.69%, with Goldfields close behind at 5.38%. This suggests Newmont is maybe the most efficient at turning profits into usable cash relative to its size right now. AEM is lower at 3.65%, Barrick at 3.16%.
And Newmont really showed that off recently, didn't they, in Q2 2025?
They absolutely did. Reported a record quarterly free cash flow of $1.7 billion, just a massive amount of cash generated.
Which connects directly to what they're doing with their money, their strategy.
Exactly. Which brings us to the bigger picture. Growth plans, strategies, and of course the risks involved.
Okay, let's start with the biggest, Newmont. What's their focus?
Their strategy seems very focused on, let's say, disciplined organic growth. They're pushing hard on their Ahafo North project in Ghana, expecting the first gold pour late in 2025. But it's not just about digging stuff up. They're also focused on shareholders. They authorized a huge $6 billion share buyback program.
Now that's really interesting, because didn't Newmont management explicitly say something like, the best use of capital right now is to buy back Newmont stock?
They did. Which is fascinating, right? It suggests they think their stock is undervalued, even though that analyst fair value estimate we saw puts it slightly overvalued currently. A real disconnect there.
Yeah, management putting their money where their mouth is, basically. But there are risks, too.
Always. Newmont did flag potentially higher costs for the second half of 2025 because of some delayed spending, and they had that operational issue at their Red Chris mine. Those things are real, and they're probably factored into why the analysts might be a bit more conservative on that fair value number.
Okay, let's swing back to Barrick then. Our potential discount play. What's their strategy look like?
Barrick seems focused on streamlining, sharpening their portfolio. They're selling off assets like the Hemlo mine for potentially over $1 billion. But the really big potential growth driver, the thing that might make that current discount look attractive long-term.
The 4 Mile project.
It's exactly. Updated studies just confirmed 4 Mile in Nevada is, and I quote, one of this century's most significant gold finds. That's a potentially massive reserve addition. Adds serious underlying value that maybe, just maybe, isn't fully reflected in that $32.99 stock price yet.
Okay. And briefly, what about the 2 premium stocks? Goldfields and Agnico Eagle, what are they up to?
Well, GFI, trading way above that fair value number, seems to be getting rewarded by the market for its aggressive acquisition strategy. Remember, they announced buying Agnico Mining back in 2024. Investors see it as a strong momentum and growth story, betting on those big M&A moves paying off.
And Agnico Eagle, more M&A or something else.
AEM is still doing deals, but maybe more tactical ones, like buying claims near their existing Detour Lake mine for relatively small cash plus a royalty. They also sold off a smaller interest elsewhere. Their strategy feels more focused on super efficient operations and locking down resources near their current mines, all backed by the incredibly strong, almost debt-free balance sheet we talked about.
Okay, let's try and pull this all together as we wrap up. There's this clear tension, right? Gold prices have exploded up 45% plus. That's lifted all these miners. But the core finding, based on the specific analyst data we looked at, is that most of the big names, Newmont, Agnico Eagle, Goldfields, seem to be trading above what these analysts calculate as fair value. You're paying a premium maybe for stability or future growth bets.
Right. And based purely on that price versus fair value comparison in our sources, Barrick stands out. It's the one trading below its estimate, offering that comparative discount. Plus, it's holding that potential A's in the hole with the 4-mile discovery. The key question for you is whether that discount compensates for the near-term risk of potentially lower output that analysts are flagging.
And here's maybe the final really interesting thought to leave you with. When Newmont's own leadership says the absolute best thing they can do with $6 billion is buy their own stock, does that signal more confidence in their real value and future than those analysts' fair value numbers capture? Is management seeing something the models aren't?
It's a classic case. Management conviction versus the valuation models. Really interesting dynamic.
Absolutely. Well, thank you for joining us on this deep dive into the gold miners, trying to find some value amidst this historic run. If this breakdown was helpful and you want more deep dives that get right to the heart of the data, please do subscribe to the channel. And definitely hit that bell icon. It really helps support what we do here. We'll catch you on the next deep dive.